Hi, I'm Susan McConnell, your LinkedIn Live for the Reserved Champion, and I host this conversation every Tuesday at noon with different people in my community to help you help your business answer questions and generally make your business more successful. And so today I'm going to do a quick LinkedIn tip, and that is make sure you set up your read receipts on LinkedIn. You go into your settings and it's in there in your settings. And what happens when you enable it is you get to see when people have opened your messages. And sometimes you just see a little check mark. And if you have questions on how to do that, message me. So today, my guest is Robert Curtis. Robert is a national account manager for Business Group Resources. It's a specialty accounting firm, and it's very cool because I've learned a lot about him over the last month or so. He brings to his work a long and successful career as a small business owner, trainer, speaker, and consultant to small and mid-sized businesses in the areas of marketing, operations, and organization. And he additionally has been a director for BNI and is a Centricity certified business coach. So that's awesome, Robert. Welcome.
Thank you. Glad to be here, Susan.
Yeah, this is fun. So I'm going to put up a few banners for people. If you're here, give us a thumbs up. And we welcome and like all questions. Don't be shy. Ask us a question. I'm getting good at the controls.
Good.
Robert has a sort of a special little niche that he's been talking about a lot lately, and it's called a research and development credit. And interestingly enough, people that don't do research can also get this. So what is the research and development credit? And I thought it was only for companies who are like invent something new.
Well, that is my biggest competition. It's not other accounting firms, but it's the name Research and Development Tax Credit, because what people think of is somebody walking around in a lab coat in front of test tubes with a clipboard. And that is originally what the credit was when it started in 1981. It was to help U.S. manufacturers who are actually doing research and development be more competitive and keep jobs on American shores. But it's been around for 40 years now. And during that time, it has expanded significantly, but the name has not changed.
Oh, I didn't know that.
Yep. So a lot of companies don't realize that they do what is considered research and development according to the tax credit. Solar companies, electricians, HVAC contractors, mostly building construction, doctors, dentists, veterinarians, people in SEO, website development, advertising, and marketing, they all do what is considered research and development.
Wow, that's interesting. So you don't have to be a research and development. You could be just like you said, a dentist or in any other profession, and you can get this credit. And so it must be hard to get the word out about that.
It is. And what the test is if you are doing one size fits all cookie cutter sort of service to your clients, you don't qualify. But if you're solving specific problems for individual clients, you do qualify.
Oh, so I think I may qualify. We may have to talk about this.
For instance, if you have a retail store and you're selling window air conditioners, well, you probably don't qualify. But if you're an HVAC contractor and you're installing HVAC units and you've got to figure out what's the load, where should I place it, what about the ductwork, that is solving an individual problem for a specific client, and you're eligible for the tax credit.
Wow. So there's many people out there that do not understand or know that they may have money sitting out there that they can get back from the government.
Exactly. The startling statistic is a few years ago, the Wall Street Journal did a poll, and they found that over 90% of businesses with 50 employees or fewer who qualify for the credit didn't claim it.
Wow, that's
and
huge.
For those businesses, it could mean tens of thousands of dollars a year in income that's going to go to the bottom line rather than to the government.
And with what we've gone through in the last few years, extra money found is a beautiful
It's
thing.
yeah, it's a lifesaver for some businesses.
Yes, that's
Yeah,
awesome.
yeah.
Wow. So how long have you been doing this?
I've been doing it for a little over 2.5 years. And what happened is I was in a business brokerage with a partner, and I would do this when we met businesses who qualified, saying, "Hey, you might as well be able to, get this money back, drop it to the bottom line. Your business will be a bit more saleable because you'll show more profit." With the pandemic, business brokerage became a little difficult because you couldn't go out and show a business, and there were rules where I live in Pennsylvania about that. And so I was doing this more and more. And I found that not only could I serve all 50 states this way, but this was something that business owners didn't know about, needed to learn about in order to keep more of the money that they make and have more control over their resources.
So why do you think that people haven't heard about this?
Well, a couple of reasons. One is the name. They say,
Mhm.
research and development. What's that got to do with me? I don't do research and development. So that's one thing. The
Mhm.
other is a lot of accountants are really unaware of it. And that, it's not bad mouthing accountants. There are over 70,000 pages in the tax code. Nobody can know all of them.
Right.
And most accountants are generalists. And what they do is their year ends, your quarterlies, a little bit of tax planning, they keep you out of trouble. But
Right.
they don't know, or they're not really familiar with a lot of the little nichey parts of the tax code. And like most other people, they think, hey, research and development is research and development. So a lot of people don't hear about it from their accountants.
Huh.
And that's one of the big reasons that a lot of people don't take the credit who should.
Correct. So your CPA may not even know about it because he's got his head buried in your books doing other things, right?
That's true. And again, I don't want to throw CPAs under the bus. I mean, they're great
No.
at what they do. And a number of CPAs understand that they don't have the time to do this or the wherewithal. They farm that work out to us, and we give it back to them to fold in with the tax filings they do for clients. And I sort of
Oh,
liken what we do to like brain surgery or dermatologist. When you go to your general practitioner, you don't say, hey, schedule me for brain surgery next Thursday.
correct.
The general practitioner is not going to do that. They will
Hope not.
refer you to a neurologist, and that's what we are. We're the specialists. We do that one little thing, and we've been doing it for 18 years. We do it exceptionally well, and we understand the credit well and how to use it and apply it to businesses who should benefit from it.
That's great. So a CPA who is kind of like you said, a generalist that handles many different clients would be a good person to know you then.
Oh yeah, yeah. I mean, we can make them heroes with their clients, and we are not. Let me tell you, we are not looking for accounting clients. We don't want to steal anybody's accounting clients. We have found our niche. We do this well. We want to complement accountants rather than take over their work.
I would think that would
So
be
we can be a definite resource to accounting firms.
right. You're a resource because you help in essence serve their clients and find them
Yep,
money. So they
exactly.
look like the hero for bringing you in.
Yeah, that's the
Hmm.
case.
That's amazing. You've been doing this for 18 years. Wow. So tell me
Yeah.
about some of your successes. I'd love to hear a few.
Okay, so recently, working with a renovation company, they do mother-in-law suites, add-ons, basements, regular renovations. Let's see, I think they did a tad under 5 million last year, 23 employees, and we were able to find them $126,000 in tax overpayments. Recently finished working with a dentist with a practice that was it hovered between 1 million to 1.2 million a year. There were 10 employees total, including another dentist and hygienist and stuff. Regular practice, nothing special. Not an orthodontist or a periodontist, just a regular dental practice. And we were able to find him $81,000 in benefits. And we are allowed, or the IRS allows us to go back 3 years to do a look back to claim any of the R&D credit that you failed to claim before.
Good
Uh,
job.
And we can do that any time of year. It doesn't matter when.
Oh,
And
that's
then going forward, what we'll do is work with somebody's accountant to do a credit study, hand it over to the accountant to fold in with with their filing, and then reduce what somebody has to pay. I mean, here's another one. It was we just got in under the wire on a Monday morning. We got the credit study back in time to file. But again, it was a small contracting company. I think about 7 million a year and about 30 employees. The owner had to cut a check for $65,000 less than he would have if we hadn't done the credit study.
wow,
So
that's
we reduced
incredible.
his taxes by $65,000.
So it's a 3-year, actually, Tom, let me just ask what the look back is. So it's 3-year look back, you said.
Yes, we can go back 3 years for already filed returns, and we can file an amended return saying, "Hey, we never took the R&D tax credit. We want to amend our returns and take the tax credit now." And then the business owner will get a refund. And then going forward, rather than waiting for a refund, we work with their accountant and lower what their tax bill will be in each succeeding year.
So going forward, once you start taking that credit, it lowers your tax bill going forward as well.
Yep, as long as you're doing what's considered a qualified activity.
Yeah, and we discussed qualified activity was pretty broad compared to what I would think when I see research and development credit.
And here's my really clunky definition. It's mine, but it's
Love
a
it.
workable definition. If you are solving a specific problem for an individual client, and to do that, you're using some sort of hard science like biological science, physical science, engineering, or computer science, and there's some uncertainty as to the outcome, you probably qualify.
Wow.
And, like it or not, you go to the doctor, there's a little uncertainty as to the outcome, right? Contractors, sometimes they make mistakes. They need to rework part of the job. If you're an SEO, you try different search terms to see what's going to attract to the right people to the website. So that's where the uncertainty principle comes in.
Oh, that's interesting. So
Yeah.
typically, Robert, what size companies are like a good fit? Like I have 2 employees. Well, I had 8 at one point, but we're down to 2.
Okay.
Is that a good size? I mean, is it a revenue size?
You remember when you learned to drive and they told you keep your hands on the wheel at 10 and 2. So
yes.
this is this is where it really kicks in for a healthy refund or a healthy mitigation of tax debt is if you're doing 2 million a year and have 10 W-2 employees. Now, that's not to say that it won't work with lower than that. If you're, say, doing $1 million a year and have, 4 or 5 W-2 employees. But one of the keys is having a W-2 employee who is not you or a family member, because this started life as a jobs program to keep jobs on American shores with U.S. manufacturers.
Okay.
So that is still in its DNA, is keeping jobs here.
So you have to have a W-2 employee
Yeah,
that's
at
not
least
a
one
relative.
W-2 employee who's neither you nor a relative. Yeah.
Okay, got it. Wow. See, there's the little ins and outs of this. So is this what I'm going to call it R&D tax credit? Are they complicated or are they expensive to, go through the process?
No, a couple of things. Originally they were very complicated. You have to have all these, time and expense records and the record keeping. It was great if you were a Boeing or a Ford, or somebody like that, but it was going to be onerous for small to mid-sized businesses.
Mm-hmm.
So they made a change that's been tested in the courts and approved, that a subject matter expert can estimate the amount of time and expenses that involved in qualifying research and development activities, and who that subject matter expert is the business owner.
Ah,
right?
there we
Who
go.
knows the business better? So you can make a good faith, estimate as to the qualifying expenses, and and qualifying activities. We back that up with numbers. That's our job. And then we're able to get the credit. So is it complicated? Not if you know what you're doing. I wouldn't suggest trying to do it on your own.
No.
And
if your regular general accountant can't figure it out or doesn't have the time, yes, you should go to an expert.
Yeah, part of it is the knowledge that that's not an area that they practice in. Then part of it is it's really labor intensive, and they have a lot of clients they need to serve, and don't have the time to really delve into this.
Yes, I would imagine. It reminds me of something I used to do where you would I used to sell electricity, and
Oh yeah.
if they didn't pay, and if there was an error on the bill, you could go back 5 years, or
Right,
if
right.
the rate was wrong, you can get money back there. So it sounds very sort of similar, except for it's just another.
Right. Just like what you were doing, there are companies I know that look at reducing companies' expenditures on operating expenses like shipping, utilities, telecom, and the rest. And we work the other side of the street. We save companies money on their tax burden, their tax liability, rather than their other operating expenses. But yeah, much the same concept.
So if you're trying to save money on your operating expenses, it's worth looking into.
Oh yeah, definitely. I mean, this is money that goes right to the bottom line. And it's funny, you and I were speaking just before we began, and I mentioned that from the day the IRS receives an amended return in the mail until the day they cut the check, the refund check back to the taxpayer, they pay interest. And at this point, they're paying 6% interest, which I don't know about you, but I'm not getting 6% anywhere these days.
Well, I was going to say that. I was going to say it's money you didn't know about. And since, obviously COVID has screwed a few things up for us.
Yes.
At least you're getting some sort of, you know what I mean? You have
Yeah.
money that you found and you're getting interest on it. That's a win-win, even if it takes longer than it has been over the, past.
Yeah, the IRS has taken a little bit longer recently than they had in the past because they were out of the office for about 5 or 6 months during COVID, and things just kind of got messed up. But yeah.
Yep.
But
just like your passport, you have to wait a little longer. So you want to think about it 2 days before you go on your trip.
Right. And it's not good the last 6 months, even though the expiration date is 6 months in the future, right?
Right.
Yeah.
Oh yeah. I did that today I did that last week because the writing's little, and I thought it said 2019, but it was 2019 issue and 2029. I was like, because I'm going away, and I'm like, oh no.
You got a little bit of time left.
But that's that whole understanding the little ins and outs of certain ways to find lost money, and that's awesome that you're doing it. One more question.
Sure.
So what are employee retention credits, or did we already talk about that and I missed it? So let's
no. That's a separate thing, and that's actually that's actually COVID related. A lot of businesses suffered significantly because of COVID. Some because the government, the state government, shut them down. They didn't allow, say, beauty parlors or some restaurants to operate, and others. Simply the business took a nosedive. And so the employee retention credit was a way to help businesses who had retained some of their employees and or paid for their employees' benefits during these times. So there's a couple tests for 2 years about how far below the prior year receipts had dipped. And if they dip below a certain amount, then the government will give you an employee retention credit, which is actually cash. It's not necessarily a credit. It's cash in the bank for the business. And even if a business has taken the PPP loans, before you couldn't take a PPP loan and the employee retention credit. Now you're still eligible for some of the employee retention credit, even though you took a PPP loan. So it's worth applying to see if you qualify. And if you don't qualify, nothing lost, maybe a half an hour of your time lost. But that is another, enormous source of cash for companies that suffered during COVID in 2020 and 2021.
So people can still, I mean, I've seen it. I had no idea what it was, but so people can still apply for this now.
Yes, through I believe it is January of 2023, and that's going to be the cutoff for application for it.
Okay, that's interesting. So companies need to keep moving on that and at least understand they can do more than one thing when it came to the whole COVID
Yeah.
solutions that they offer.
Yeah, right. And at this point, anything that helps companies, get back to where they were,
That's
is
awesome.
important. Yeah.
Awesome. Well, this has been awesome. So how can people reach out to you if they want to
Well, my
inquire?
my email is impossibly long to remember.
And I'll put it,
So-
I'm going to put it in the notes and I will also put it in the post as well. So,
Okay, well, thank you. But the easiest way is to go on LinkedIn, and I'm Robert Curtis with two S's, Curtiss, and there's a green check mark after my name.
that's
There's
right.
a couple Robert Curtises there. One's a financial advisor. One might be a veterinarian, but I've got the green check mark after my name. So send me a direct message and I'll get back to you right away. We can set up a 10-minute phone chat and see if you qualify and answer any other questions you may have.
Well, I think it's well worth the 10 minutes to reach out to you and find out if you do qualify because it could be what, tens of thousands of dollars from what I hear.
Definitely. Yep.
That's incredible. Awesome. Well, thank you for joining me today.
Oh, sure. A pleasure, Susan. Always
Yeah.
a pleasure speaking with you.
And make sure, everybody, that you join me next week as well. Next Tuesday, I will have Russ Hedge on. He is a marketing coach, I should say, and a keynote speaker. He's got a ton of energy. He's been doing it for like 30 years. And he has a different approach, like just like you said, in like the different areas in marketing, there's so many different specialties that not everybody can be a specialist, and he great at what he does. So join in.
Well, good. I'll be there.
Awesome. Thanks, Robert. Thanks, everybody. Have a great day. And
Thank
don't
you.
forget to be fabulous today.
Thank you, Susan.